feel like we finna change the cycle, ayy. That's more success, you know we thriving, ayy. That's more depression for our rivals, ayy. Could teach a lesson on survival, ayy. You know I'm from the bottom.
Whoa. What's happening with it, wealthy people? It's your boy David Ballard, half of the Black Wealth Renaissance crew here with my brother from another, Jalen. What's good with you?
Whoa, what's with it? What's with it? How y'all doing, man? I'm feeling blacktastic, feeling amazing, blessed, happy to be here. How you doing, Dave? How you doing, my brother?
Man, I am doing stupendous. I can't even, if I was better, I'd be lying, dog. I'm doing great. It's feeling good to get back into the flow of getting into podding, man, and getting this show rolling. Gives me something to look forward to, information to put on out there for the folks, and yeah, just keep help us growing and glow, man. That's all I want to do is just keep pushing and to see if we can get this momentum back rolling, getting the show back where we had it, getting this impact out there for the people. So yeah, I'm feeling good, man. I'm feeling good about where we are, what we doing, all that.
Same here, brother. Same here, man. I'm really ecstatic and just looking forward to seeing how far we can take this, how much bigger we can make it grow, especially just with constant consistency.
Indeed.
Yes, sir. Man, I ain't got nothing to start off this episode with. You got something for me?
So, nah, man, I don't have anything, no major updates, life-wise. You know, we talked about what I got coming up, just travel next week. Just, yeah, same old life, just life, and man, we just keep doing what we're doing so we can get into the show, you know. We value your time and ours, listening, so we just get straight to it.
Let's get it then. You want to start off with the first topic?
Yes, sir. So first topic of the day is something that I believe is we have to touch on because this is something that's growing in prevalence.
It's near and dear to David's heart, guys.
It's not near and dear to my heart, but it's growing in prevalence and it's becoming unavoidable for the everyday person, and that is prediction markets, right? So prediction markets. Hey, that's Silicon Valley's newest tool to separate you from your hard-earned capital. That's the way I look at it.
Is it Silicon Valley or Wall Street?
Both of them. I think they in bed together. These are two of the fastest growing companies in the section. We have Kalshi and Polymarket. You probably heard of both of them. These are two of the premier players in the.
What about RainBet? Is that part of that too?
I'm not sure if RainBet is considered a part of it. It likely is, but they're a much smaller
players. I see them a lot too, though.
But these two are by far the largest players in the market.
Gotcha.
Polymarket is built on the Polygon blockchain. It is the largest internationally. I want to say it holds like 85% of prediction markets value internationally. Jeez. And Kalshi is the U.S. focused one, so they focused on U.S. regulation, and they control 90% of the U.S. market. And they're both, neck and neck, some of the fastest growing things. With Kalshi specifically, they're growing so rapidly, it's almost insane to think about. Back in September of 2025, their total nominal value, which is just the total amount of dollars traded on the platform, was around $5 billion a month. As of last month, that number skyrocketed to $24 billion.
A month?
A month in just trading volume. So like these... They're getting in your face. People are hopping into these markets.
I got a question. I don't know if you know the answer to this. What's like the trading value of like crypto, and I know stocks is probably in the trillion, like they're trading.
Oh, in terms of like total market value
per day
of this per day. I don't know a per day number, but the total market value of this, they're based it on Kalshi's predictions. Kalshi's saying they're like 170 billion. Polymarket's probably doing somewhere around or the same. So you're looking at least a $500 billion market more than likely right now. Yeah, this is huge, right? And it's big because your boy Zuck trying to get in on it. And you know him.
I actually saw that.
You can't beat him.
Join him or whatever. Beat him, join him, copy him.
If you can't beat him, join him. No, he don't join him. He either buys them or copies them.
You're right. He definitely copied Snap. What else he copied?
Every great feature anybody else has ever had. That's what he does. That's what he does.
He copied Reels from TikTok.
He did all of it, bro. Like anything he can do, he will copy it. And that lets me know though that this is something that's here to stay, and it's really ingrained in society. And it's important that on this show we discuss it, because if you don't know what you're getting yourself into, you can easily get swept
I
up.
don't know. You think it's here to stay because Zuck has did a lot of copying moves that ain't really playing out, brother.
Yes, I do think it's here to stay, and it goes back to the corruption economy. So the reason I believe it's here to stay is because the involvement of the president's son. So for both Polymarket and Kalshi, Donald Trump Jr. is an investor and an advisor to both of them.
What you mean that?
That's a good question, right? Because they asked the CEO of Kalshi the same thing, right? I don't know what he does. I got a clip. You want to see it? You want to see? Let's see what they say. We'll hear from Kalshi CEO himself.
Why did you guys make Donald Trump Jr. a strategic advisor?
We have a lot of advisors, and they span across the board, across different functions. But really, this is all about growing this industry, the prediction market industry that a lot of people really believe in.
What kind of advice does he give you?
So it really is, again, about growing prediction markets.
Does he come to meetings? How much do you pay him? What's his role? I mean, this is the son of the president.
We have a lot of advisors.
He's not just any advisor. He has a direct line to the White House.
Bro.
Wait a minute.
You know what I'm saying? Like, does this sound like somebody or something that's on the up and up, or a part of the infrastructure of that corruption economy I'm talking about?
I think that this is, once Trump, because they are, okay. Once Trump is out of the office, I think a lot of people about to take a lot of heat, because I forgot one of their speakers. I forgot his name. It's Mike Johnson or Mike something. I think his name is Mike, though. He was actually, his plea to keeping people to vote for him was like, if y'all don't vote for us, we all go to jail. Y'all gonna be, bro flat out said, y'all gonna be investigated. We gonna be investigated. Y'all gonna be investigated. So please help us win. Like, that was literally his words, verbatim, bro.
That's hilarious. But even with that said, Jalen, I don't think they're going anywhere because of how much capital has been poured.
I think it'll be a lot more tighter regulation.
Oh, it's going to get more regulated for sure, but they're still going to be around is what I'm seeing here. And really the reason I believe that is because of how integrated they've become into things. Bro, Kalshi has a partnership with CNN to where they're running their odds on as a ticker on the bottom of CNN. Knew that. Yeah, like these things are starting to become ingrained institutionally in a lot of things. People are using, the major institutions have partnerships with Polygon, Polymarket, and Kalshi. They're
like when you say
mesh.
Major institutions besides
the Dow
CNN,
Jones has a partnership with Kalshi.
God damn.
Polymarket. Like that's what I'm saying. This isn't just like on some, they're just spending money. Like, you know, it's more ingrained in society than I want to say.
So maybe whoever that CEO, he was saying a lot without saying a lot. Whenever she asks what y'all did, what is he doing? He's saying grow prediction markets. So it does sound like he is advising, and like she said, got a direct tie to the White House. It sounds like he doing something to grease somebody's pockets to get this thing to stick.
Economy, baby. You pay me, you work, you scratch my back, I make sure it go away. You know what I'm saying? That's how it go. That's where it is with it. But to your point, they will become more regulated, but I don't see them going anywhere. And with them not going anywhere, I think it's important that we talk about it because of how these things are marketed, right? These things
are just like sports betting,
but they try to advertise it like it's better than sports betting. And in a sense, it's not exactly like sports betting because of how it works, right? So with sports betting, there's the house. In this, there is no house, quote unquote. The way these things work are based on just a market, a one-to-one market, right? Every contract is a $1 contract. And for every winner, there's a loser. So if...
What you mean, you only bet $1?
Per contract. So the way this is structured is every contract is $1.
Okay,
And
so
the
if I want to
odds,
put $100, I'm buying 100 contracts.
correct, right? And so just getting into how prediction markets work, I think this is a little easy visual aid to kind of show, but this is the basics of it, right? So you have an event, a question, is X going to happen by Y date? Yes or no? You pick yes or no, right? Every contract is based on $1. So you buy shares of yes and say 60% of the people agree that it's going to be yes. That's where your odds come in at. So the percentage of the current percentage that you see out of the dollar, if it's 60 cents on the dollar for yes, that means 60% of people believe the answer is yes. Making sense? Okay. So like once the event actually occurs, boom, it's confirmed. There's a deadline date usually listed on there. It's confirmed. They say, okay, this happened. This was the outcome. Then the winners are paid out. And if you chose no and the answer was yes, the 40 cents that you had put up goes to the person who had the 60.
Gotcha.
Yeah. So it's a zero sum market. You either win or you lose, right? There's no in between. Now you can trade in and out of these contracts. That is a aspect of it where you can make money. But with the way this is structured and marketed, a lot of times it's pushed as this tool for financial freedom, especially, I don't know about you, with the World Cup going on right now, I've been getting a lot of ads for Polymarket.
I ain't been
Talking
paying
about
attention to
games
none
and
of
making
this.
money off of your opinions and things of this nature and showing you examples of how you can take a small amount of money and turn it into a large amount of
Matter
money.
of fact, you a lot. I did see some. I saw today for the World Cup. They was talking about Mexico being one of the sleepers in there, and they was like, if you put $100 in, you can win 4,000.
Exactly, right? So they're marketed as this tool to the everyday person as something that you can use to attain financial freedom. And when you listen to the CEOs talk about these things, they don't portray them as what they really are. These things, you said it, they're mostly sports betting, right? That's largely true.
But you
Most
can
of
bet
their
on other stuff like will it rain in Wyoming?
Yes, but like largely speaking, what you just that is the majority of their volume. So like when we're looking at the volume for these where the money is being spent, by and large, you can see in this chart, if you're watching on YouTube, the blue section is sports betting. Of the what was the total? I believe it was 24 billion. The 24 billion in April,
Mm-hmm.
15.5 billion of that volume came from sports betting.
Sheesh.
So
Damn.
the vast majority comes from sports betting, and then you can see politics, betting on crypto prices, whether they will rise or fall by X time. Like, will Bitcoin be over 60,000 by July 1st? Right. Those are the types of bets that you see people making. And those other bets is what you just mentioned, where like you got people betting, is it going to rain in Billings, Montana, and stuff like that. But
I
these
guess I
these
can
things,
see how people would be fooled with that too. Like you said with the cryptocurrency, right? Like, will it be at 60? They're thinking, oh, I don't have to actually own the Bitcoin to get in on the run of the Bitcoin.
yeah, and you're just making these really speculative gambling contracts. Like you're
That's
just
all
making
it
a
is.
speculative gamble on a bunch of stuff. And that's where the danger of prediction markets come in, right? So that's really what I want to discuss with it, because I don't think, truthfully, after doing research and looking into it, I don't think they're all bad. I do think they have some utility.
Can you
The
hedge your own risk and stuff with it? You
What do
could
you
do
mean?
like, you know how like if you're hedging with option contracts, you might do
No,
so
you
many
can't.
calls and then you'll
You
try to
can't.
do some puts.
You can't.
So you got to either be all in yes or
If you
all in
lock in
no.
on one side of the contract, they'll lock you out on the other side.
Really?
Yeah.
That's chump.
Unless it's like a multi-leg event. So like say, okay, if like on Robinhood, for instance, there's you can bet on it, the Fed, FMOC meetings, right? FOMC meetings. With those, you can bet like, are they gonna have one rate cut by the end of the year, two rate cuts by the end of the year? XYZ, right? So you can lock in for each individual leg. So like if you said yes for one and you want to say yes for another one, then yeah, you can cover yourself that way. But if you wanted to say yes and no on the same leg, no, you can't because it's a 1-to-1 situation.
Got you. My other question: are they actually verifying IDs and stuff for me to do that?
I believe so. I think there's still all those laws. Most of the prediction markets, I haven't interacted with them directly, but on Robinhood, Kalshi's prediction markets. Robinhood's prediction markets are powered by Kalshi.
I didn't even know
So
Robinhood had prediction markets. This is
Robinhood
crazy.
has prediction markets, and they're powered by Kalshi, and they're treated like derivatives. So it's like trading options or stocks or anything like that. That's kind of how they're treated and regulated in a sense. And with how they've pushed with regulation in the U.S., instead of being regulated by the SEC, they're actually being regulated by the CFTC. So there's not getting
CFTC. Is that crypto?
no Commodities Future Trades Commission.
Got you.
So they're still commodities. It's still a investing entity that is regulating them, but it isn't, the premier that we typically hear about with the
like
SEC.
the SEC. I got you.
Yeah, SEC. So with that, we've seen a lot of growth in both of those markets. And what I wanted to look at, because in researching for this topic, I found 2 academic papers, recent studies that spoke a lot about who's actually winning on these platforms, right? Because a lot of times they're marketed to us like these long shot things that you can come in and you can flip, like Jalen just said, put $100, you can win 4,000, right? These lotto type wins. But what's actually going on here? Like, who's making the money? Is it people on the inside with information that are taking advantage of non-public information to trade? Are people just good at this? Is it just, the whales making money? What's going on here, right? So,
hey, Paulie, I want to put $200 on insider trading.
You think it's insider trading?
Yes.
So,
I'm betting the house on it.
You betting the house on insider trading?
Yeah.
Final answer.
Final answer.
Well, my brother, I'm sorry to inform you, you would be wrong. Based on the findings in 2 of these research papers, the first, prediction market accuracy, crowd wisdom, or informed minority, this one found that only 967 accounts were identified out of a study of over 2 million accounts. 967 were identified as ones that use non-public information to make money. And they only accounted for 0.2% of the total trading volume and 1.3% of the profits. So honestly, insiders is not really who's making the money. It's almost negligible what the insiders are leaving here with, right? So if the insiders, you said you don't believe it?
I'm calling conspiracy here.
So this is actual data, though. They ran it through an LLM. They went and identified the accounts. They said the parameters, and they identified 2 of those accounts that are actually in 2 of the wallets, rather, that are involved in legal proceedings right now. The CFTC is actually suing 2 insiders related to these trades, right? These types of prediction market trades.
Snap.
So one is a U.S. military sergeant who used his non-public information about the Jose Maduro capture to make money. Between December of 2025 and January when it happened, he's put in about $33,000 in over 13 trades and ended up netting about $400K.
Wait, how much money he put in? 33,000
starting in December. Yeah, he put in 33,000 starting in December.
And pulled out 400.
Pulled out 400.
Hey man, somebody cue the Kevin Samuels. You can't make this up.
And the other case, the other insider case, is a Google engineer. This is something I wanted to talk about a while back, but ended up not. We cut it for time. A Google engineer. This case was more recent in the end of May. Their name Michelle Spagnolo. They're based out of Switzerland. Their account is Alpha Raccoon, and they were sued for making 1.2 million on Polymarket using insider info. They used some non-public information about
1.2.
Google's. I forget which aspect of Google. Believe it was the release of something related to Gemini, and they used their information about that to make money on there. But still, right? They found that only 1%, less than 1% of the volume of this is coming from insiders, right? So who is making the money, man? Where is the money coming from?
Them dumb little dudes on social media.
Nah, bro, it's not them. We're gonna get to them.
Come on, man. Who's trading this much money?
So, boom, who's winning, right? We got insiders, right? They only account for like 1% of the less than 1%. But then we got our skilled winners. They about a third of the people who actually win. They're actually good at this. They know how to react to the news quickly. They hop in and out of markets and anticipate events better than a lot of the people who participate in this, and they're able to make money.
Third is actually a nice sizable chunk.
And they make up about 20% of all profits on the platform. Now, that third of users that are considered skilled winners can be broken down even further. Within that third, skilled winners, they account for about a third of all the winnings on the platform. And that breaks down even further, right? So of those people, only 3% are considered genuinely skilled. So they're like, yeah, you good at this. You know what I'm saying? The other 29%, they just lucky. Hey, they got in at the right time, made some money, and then they shut it down. They're like, hey, I know when to hold them, when to fold them.
So how they considered skilled? They can't just be considered lucky?
The skilled people are considered skilled because their wallet showed when ran through the LLM consistently them making the right decision at the right time to make money.
Got you. But if so, why wouldn't that 3% be larger than? I get what you're saying about like them being lucky. The people that are lucky, they just a one-time trader, and they
made one or two. They're not consistently winning.
Gotcha.
They're profitable, but they're not winning consistently. They had like a long shot bet that they took that hit.
Okay.
So some of the people that the lotto actually hit. Think about it like the people who it's a bunch of people buying lotto tickets, but some of them actually hit, right? These are the people whose lotto tickets hit. Now, when it comes to who's not making money, that's the vast majority, close to 70%, right? And 62% of those people are considered unlucky. So, they may have won here or there, but they got more losses than wins. And interestingly, there are 6% of people who are considered anti-skilled, which just mean they trash. Like they basura the ass. They just don't need to do it. Like they so bad that they flagged them as like, yeah, he really garbage at this. And he should probably not do this.
He's lost everything.
And he keeps coming back. They say they lose more than the average loser. You're a loser amongst losers. If that's you, stay away from these platforms because it's not the way for you to make it here, right? And lastly...
And call the gambling hotline.
Yeah. Lastly, who's making money? Institutional investors, right? Market makers. So companies like Morgan Stanley, they come in and create liquidity in the market. So I know I mentioned that, it's just a 1-to-1 contract in terms of like, hey, there must be one winner, one loser. The total value is $1. But how market makers make their money is they come in and set odds by placing limit orders. So they'll come in and say, hey, okay, I'll come in on this question and say, I'll buy half a million of them at this percentage, right? And as people are buying these contracts off, as the price and odds change, they're selling off their contracts. So they come in low and they make money off of the spread of selling their contracts to people who are coming in and buying them later.
So can they say yes and no?
Interestingly, I believe they can. Because when it comes to
That
profits,
sound like booty.
when it comes to
It's
profits,
a
right?
sham. Y'all stop playing with these people.
So I think that it may be the case because the money, when it comes to this, we've already kind of relayed this with this, showing the small percentage of skilled winners versus people who are lucky and market makers. But what they found when looking at this is that the vast majority of the money with prediction markets is held at the top, like a ridiculous amount. So the top 25% take home 99% of all profits. And you would think, okay, that's a fair amount. I said a third of the people are skilled winners, right? I mean, a third of the people are winners, skilled traders, whatever. But where you can really see the disparity here is the top 0.1% from the 25. 50% of all profits go to the top 0.1%. And those are your institutional investors. Those are your people who are setting the odds, right? So from where it sits, the people who are making money are the people who are considered the makers and not the takers. So this chart on the right, it kind of helps better explain this. So when it says maker volume, these are people who are placing the limit orders, putting in at a certain price. Hey, this is what I'm gonna buy it for, and I'll sell it to somebody later for a profit. So you can see the top 1%, they make up the majority of the limit orders, almost 50% of them. And they also don't take a lot of long shot bets, like the ones that are real super low percentage compared to people who lose a lot of money. The institutional investors, they will take some of those bets where it's like a long shot. Hey, it's a 4% chance of no. They'll buy it, but not nearly as frequently as we'll see people in that losing category buy, where it's like people who are losing more than half the time, they're taking those lotto type picks, going for those long shot odds where they're looking at, hey, it's a 10% chance it might happen. And they're making a bunch of bets like that instead of doing like some of the people in the top 25% where it's like, hey, every now and again, it's at 90% odds it's gonna happen. I'm just gonna buy hella contracts at 90%. And when it pays out, I just take that 10% spread.
Whenever you think about it like that, if you can guarantee 10%, that's still really good for investing.
And it's a different way of looking at it, right? When it comes to these prediction markets, because realistically, I don't think they're inherently bad. Like the more I looked into it, at first when I wanted to look into this topic, I'm like, man, I'm like you, Jalen. I'm like, man, this is insider trading. This is BS. Like they're trying to rob us, bro. But the more I looked into it, it's like it's institutionally it is set up to take money from people who are
Take from the
more,
needy, give to the greedy.
I mean, in a sense, people who are more willing to take that lotto type risk. Where it's like, we talk about that with the lottery all the time. You thinking $1 or $2 a day ain't hurting you with the lottery, but you look at that over 40 years, you're not making no money off of it. It's just money down the drain. You could have did something else with it. By and large is the same thing that seems to be occurring here. But where it differs is if you're willing to be a person who is patient and thinking of it more from an investor mindset than a lotto mindset, you could stand to make some money on it. Like if it's at 90% and the odds close tomorrow on something, you could make 10% in a day theoretically. That's not bad. Like, and from my research and what I've seen in a couple of those papers, that's what most of the skilled traders do. They come in closer to the end of the contract. With a lot of the retail investors, they are just kind of they hop in at the beginning and the market's jumping all over the place because they don't really have an idea. They're just like, hey man, I think it's this. They're trading on their opinion as it's marketed. Mm-hmm. But when the skilled traders come in, usually they come in with heavy volume and they're the ones who are pushing the odds in the favor. And they're able to make their money that way.
That's interesting. How late can you hop into a trade, right? Like, let's say
before the deadline, long as the odds are still open and it's not like 100% and there's liquidity there, like somebody's on the losing side that's still taking the long side bet, you can hop in at any time before
Gotcha.
the
So
deadline.
once it go 100% to either way, that
Whenever the
means that it
event
happened.
happens,
That
yeah,
means
once
that
the
it
event
happened.
happens, it's closed,
Gotcha.
But prior to that, prior to the actual event, you can bet up to the odd, like to the finale.
So what if it opened up though, and it is still like 100 people? Like it's still 100%. You still won't be able to bet on it because
I mean,
the
if
institution
it's
is going to be the people
100%,
that will.
you have no buyers. You have nobody that's gonna buy the. You have no money to be made
Gotcha.
if it's at 100%, because whose money are you taking?
I guess that's what I was getting at with the institutions, right? That's when you said that sometimes the institution will put on a 10% odd, but they're not going to do it as frequently as
And
just the everyday average Joe.
the difference between the institutions and the average Joe is the institutions place limit orders and the average Joe does market orders. So the institutions, they have a price target. They're thinking, oh, I can get in here and then I can sell here. They're not trying to get
But
5 cents to go.
contract $1?
The contract is $1 per contract, but you can trade in and out of these contracts.
So let's say the contract goes from 90% to 80%. Is that when you're trading in and out of it?
So you're looking at it from it going down. The way they're making their money is off the spread difference between, say, they got in and the odds were 5% no.
Mm-hmm.
Well, that's the long shot bet. They're selling their long shot, say, at whenever the odds get changed to 10% no. So they're not waiting for the actual event to happen. They're selling off these contracts as new retail investors are entering and making those long shot bets. And that's how they're making their money. As the retail investors come in and buy the long shots and push that value up, then their value goes up. So they bought it at 5 cents. Retail investors pour in. They start buying 5, 6 cents. They don't mind making a penny spread because
of the volume that they're doing.
Yeah, volume. So like they can buy for 5 cents, sell it for 6. And as it continues to climb, they're just selling off these orders. And that's where they're making their money.
Okay.
They're making their money by not being the takers, quote unquote. The takers are the people who are just hopping in and like FOMO investing. They see it like, oh, I want to be in on this. I need to get in right now. And they buy a market order. And then they hold it and watch the odds go up and down. That's not how these people are making their money.
And the retail investor can trade it as well if they wanted to, too, right?
Yeah. The retail investor can trade it as well. Retail can trade in and out of it. You don't have to hold the position. That's part of it. Why they consider it a derivative, like options. You don't have to hold the contract and exercise the option. Gotcha. You can sell it off to someone else as the value changes. So that's just kind of how that works with that portion of it. Another interesting point about this that I want to get into was with how they've built the hype for this, right? Because it wasn't something that was just a commonplace thing. You don't 5x your value in 6 or 7 months without going on like a crazy hype train, right? So I want to show y'all something.
Them damn streamers.
Meet George.
Hi, George.
George is a college student, aspiring CPA. He's a creator that was
a scam.
He was a creator that was hired by Polymarket.
50, 20, spend it, yeah.
The WSJ.
George, did that go your bag?
What?
George, spin that
Bro, relax, bro. No, so George is a college student, and he's one of many college students that Polymarket was found to have been paying off the books to make fake trades and show fake wins.
No way.
Bro, this is so crazy.
I told you there's some scam.
So two different publications reported on this, the Wall Street Journal and Politico. And I got a video. They got videos. They got all the receipts, bro. Check out this video with George.
George, spin that shit. Spin that shit. Spin that shit. Yeah, spin that shit.
Okay. So here's the video that they found of George, right? So it was a video where he placed a fake bet on Trump to say McDonald's.
Trump say McDonald's in January?
Good deal as usual. But you know, in the old days, McDonald's...
So George is one of the creators, right? And there's multiple videos like this. He's not the only one. Here's another one.
What? Will Trump say April Fool's this week? 4%? Bro, what the?
Want to be accused of April Fool's? Yeah!
What the Wall Street Journal and Politico found was, you see the formula here. You see a common thread here with these videos, right? They're structured the same. They have the same general structure, you know. What the investigation found was that they used a lot of clickbaity type hooks, like bro what, and like things like that. How bro, the second guy started the video.
Very over sensationalized.
Very sensationalized. And what they would do was they were making fake bets, right? This is crazy. So Polymarket actually made a fake website for their creators to make these fake bets on. And they did it
like a demo account.
Way. Yes. But the way they did it to make it look right, when you know how a capitalized I looks like a lowercase L on a computer, they made the URL PO capital I, Poi market is what they're calling it, instead of Polymarket. So like whenever you look at it on those videos, if you look at the URLs, it looks like Polymarket, but it's actually a test account that they're going in. So they're not actually making these trades. So Polymarket was paying these kids to make these videos, these college students, showing them making all this money to get people to hop into the market and make these types of long shot bets. And to make it, what was even more insidious about this, they didn't just stop at getting the kids to make the videos. They actually hired a bunch of people to repost the video.
Not to repost it. They didn't buy the videos too?
So they bought, but not like bots, like actual humans.
I know.
So they built an organic looking social media campaign using, deception to get people into this market. It was a lot of shady stuff going on. So like both of those videos, also what they found was that they use outdated clips to sell their point. So like in George's video where he showed he bet 1,000 on Trump saying McDonald's, right? He used a clip that was 2 months before that. So it wasn't even in January whenever he did it. He used a clip from November where McDonald's was mentioned and showed that he won 100K.
But just fooling people on some stuff that already happened. You knew it was going to happen and you made it look.
Exactly. Now, 50 people actually took the bet and they all lost.
Like in January or before January?
I think probably looking at what they might have seen on the ad or something like that. Who knows?
That's crazy.
I'm not sure. Maybe they deserve to be exit liquidity. But in my mind, I don't understand how you would hop in that trade, right? It just doesn't seem like it makes sense. But
so if George and them and the other Clippers were smart and they knew that was happening, they could have been making money both ways from being paid, but also being the opposite of the bet that they know wasn't going to happen.
I don't think they were thinking that way though, man. It's college kids, you know what I'm saying? So what the investigation found, that they were paying them like $2 to $3K a month. And as a college kid, man, $2 to $3K a month.
Just to post videos? I'm with that.
I'm up, bro. What you talking about? I'm doing way better than a lot of my classmates.
I'm telling
you. And they were instructed not to disclose that this was an actual deal with Polymarket. So like none of the videos have that it's an ad on there. And this campaign got them over like 140 million views online. So you can only imagine how many new leads were captured. And it's just on Polymarket side. We're not even talking about Kalshi. How many new leads were captured by this? So here's where it really gets crazy. So this investigation reviewed over 1,100 videos and found that 70% of the bets were staged. And in those fake bets, people reported over 900,000 of winnings, But if you actually took the bet, you'd have lost 166K. Over 100 of the videos had that same formula showing that they were using outdated footage too.
So you said the winnings, it showed like they won.
In all those videos using the fake Poi Market website that the creators were using, collectively, they won over 900K.
That's crazy.
But like with the actual trade, if you'd actually took the trades that they made, you'd have lost 166K.
Hey, boy, I ain't gonna lie. You better hope I wouldn't have found you, George, because I'm about to I gotta take some kneecaps out.
Man, why are you mad at George? You mad at the wrong motherfucker. I'm gonna show you who you should be mad at, bro. You talking about George? He a pawn, bro. But the king stay the king, bro. You got to know who the king is,
Him
man.
too.
Look, and these are the two dudes you need to be worried about right here, right? So, Buddy on the left, the CMO Matt Madaba, and the CEO.
Nah, man.
Shane
Nigga name
Copeland.
is Matt Madaba. I can't trust nobody with a name like that, man. Hey, man, what's your name, Matt Madaba? That sound like a pseudonym. Dr. Seuss ass name, man. Come on, man. David, this get crazy by the second, man.
Bro, I'm telling you, this is the craziest. This is the craziest part of the story, though, bro. So, not only were they paying these kids $2,000 to $3,000 a month and told them not to disclose the deal, Matt, the scammer with his Dr. Seuss name you just said, he was paying these boys out of his own personal PayPal. Big scamming, bro. Personal PayPal. So
He's stupid. PayPal one of the worst places for you to do this type of stuff, man. PayPal will lock your money up for a lot less, man.
Hey, man.
Them people ain't playing with you, man.
Hey, man, he thought he had him one, bro. He thought he had him one.
PayPal don't play that shit, man. I'm sorry for cussing, y'all. I'm so sorry. So sorry. But, y'all, PayPal, if you have ever ran a business and you use PayPal, you know PayPal that locked your money up when you really needed it.
Hey, they done did it to us before, man.
When you really needed it.
Like,
them boys locked up like 10 bands for us before.
Bro, you done did business with these boys for 6 or 7 months before that. Money good. All of a sudden, hey, wait. You got too much motion. Lock it up. I'm surprised they didn't flag it when he was doing it, to be honest. But
that's why I'm saying I can't believe he was using PayPal. He must know Peter Thiel.
He knows somebody, because it was under wraps until Politico reported on it. Yeah, so it's insane, man. It's insane. But I say all that to show the engineer hype machine is trying to get us in and be those long shot bettors. And to me, what they trying to make you is fucking exit liquidity, man. That's what they trying to make you be.
All right, man. We dropping F-bombs and stuff. We got to reel it back in. We got to slow our roll.
All right, I got too much dip on my chip.
Too fast.
I got too much dip on my chip. I'm sorry, listeners. But it's true. They're trying to get you to be their exit liquidity. And that's all I see from this. They want you to come in and be the dumb retail money. Come in, take these long shot lottery bets so that the institutions can make money and the dudes who smart enough to realize you stupid can make money. Don't be in the anti-skill group. If you want to get involved in prediction markets, just looking at the data, it looks like a much safer bet to go against your inherent mental bias, right? Because it's something about our brain chemistry as humans. We see a low risk, high reward, and we're like, I need that. But if you can go against that and take the lower reward for the higher risk, you can more consistently make profit. Because that's what the market makers are doing. They're not buying it. They're not hopping in the market, seeing all these bright colors, seeing the odds change on these charts and like, ooh, I need to get in now before it changes and I missed the boat. They're not FOMO investing. They're setting price targets and they're selling these things off strategically. As a listener of this show, say all this to say, if you're going to get involved in prediction markets, make sure you have a strategy. Do not be exit liquidity. I repeat, do not be exit liquidity. Don't go on there taking bets like that little buddy, like Jalen little buddy George line saying, oh man, 4% chance this gonna happen, and you thinking you're gonna really make this money, and it's not gonna happen. Don't go put $1,000 on a 4% chance. Listen how stupid that sounds.
You deserve to be robbed.
It sounds. Oh.
You okay, man?
Bro, I'm about to crash out. I ain't gonna lie.
It's okay, dog.
It's okay. It's like, bro, why?
Have faith in our listeners. I don't think they do it. They move it like that, dog.
I don't think y'all is moving like that. But if you know somebody that's moving like that, listen, play them this segment. I want them to understand what's going on.
You know somebody that's moving like that. I know one of your cousins is on there.
Nah, they on sports betting still.
I can bet my little brother's probably on there.
They on sports betting still. They still on DraftKings. They ain't really moved over to Kalshi and Poly Market and all that yet. But who knows what the future holds?
That's crazy, man. Yeah, y'all be safe out here. I hope y'all not betting on that. If y'all are, thoughts and prayers.
More power to you. More power to you.
Hell yeah. So we're going into the next topic.
Yes, sir. Moving on. Hot off the presses. What's going on next?
Let's talk about Big Kev.
Big Kev in the building.
House. As we were talking about regulation and, federal money and SECs and everything, let's pivot into the new Fed chair, Mr. Kevin Warsh.
Yes, indeed. Shout out to Big Kev. So you see it on the screen right now, man.
I ain't shouting Kev out yet, man. Rome,
okay, you're right.
Rome good in my book. Big Rome is good in my book. But Kev, to be determined.
Yeah. So Big Rome, everybody that heard his name before. Jerome Powell, the first white man I ever seen named Jerome.
I had a teacher in 10th grade, Mr. Jerome McDougal. That was my geography teacher. Whenever we learned that boy name was Jerome, bro, Jerome, the whole class was crazy. They said, "Oh, you got a black man."
Jerome is the blackest name I've ever seen for a white man that looks like this.
Mr. McDougal looked like that Jerome, bro. And he spoke in a very slow tone, like
it was Clear Eyes Man.
Yes. That was my dog, though.
Shout out to all the Romes, man. Shout out to all the white Jeromes on the planet, man.
Shout out to you, Mr. McDougal. You made geography fun.
Yeah. So again, back to it. Jerome Powell, he was the Fed chair long time. I think since like 2016 or something like that. He did a great job managing through COVID, all this stuff. And now we got this new guy in here. New sheriff in town, Kevin Warsh. Jalen said he ain't shouting out Big Kev yet, but I'm shouting out Big Kev because I kind of like where things are going. We talked about this a little bit before.
Seen them though.
He only had one meet.
Okay then. That's why I can't shout him out.
I like where things are going. So for everyone that's not familiar, Fed held their June meeting earlier this month. And Kevin Warsh, it was his first meeting as the Fed chair. And the decision that they came to was to hold rates steady. So no rate cut, no rate hike. The federal fund rate was held at 3.5 to 3.75%, that range. So with that, it was a couple changes with the new sheriff in town coming in, right? So Kevin Warsh, the way he speaks regarding this, we're seeing a shift in monetary policy to what is known as being a more hawkish approach.
We actually talked about the hawk approach like 2-3 episodes.
Yeah. So there's a belief amongst majority of the Fed members now that we're going to have to actually raise rates once this year. So we've gone from talking about a potential of a rate cut to a potential of a rate hike. And this would be the first time we've raised interest rates since 2023.
That's a while.
And
that's 3 years.
Yeah. So what would be the potential benefits or consequences of something like this, right? So there's two ways you can look at monetary policy. We talked about the hawk and the dove, just get into it a little bit more. So dovish policy is loose monetary policy. We're making borrowing easier, lowering rates. People buy more. That's what we've seen during the pandemic, right? That's why our real estate prices are out of whack now. We had this really loose monetary policy. people spending money, businesses expanding, a lot of people employed, right? Now, with him talking about hawkish policy,
That's a bald eagle.
hey man, it's the only emoji they got. Listen to me. If they had a hawk emoji, I'd have found it.
I just had to be a butthole, man.
If
Definitely
they
a
had
bald
one,
eagle, though.
if they had one, we'd have used it, but we ain't had one. So boom, we gonna take what we got. But with the hawkish approach, right? They're gonna tighten monetary policy, so you're raising the rates, making borrowing harder. People are gonna buy less goods, postponing expansion. Unemployment will increase. Unfortunately, that's a byproduct.
Sound like that's already happening.
That's my point, right? So with everything that's going on right now in the American economy, I don't see how anyone could take issue with someone coming in and just saying, "Okay, guys, we need to lock it down. Like we need to combat inflation." Because as of late, right, the Fed has what's called a dual mandate. Their dual mandate is they want to maintain economic growth, jobs market, and combat inflation. Our inflation target is 2%. Right? As of May, inflation came in at 4.2%. So we're still quite a ways away from the inflation target. And with a rate cut, we would increase inflation. So what I like is that they're kind of taking a hard line stance on, no, we need to combat inflation first. Because realistically, the cost of living is the bigger issue, right?
And it is going up drastically.
It's going up drastically. And wages have not caught up to the cost of living. They're increasing, yes, but they're not increasing in lockstep with the cost of living.
Speaking of wages going up, bro, did you see what the state of Oklahoma did?
They voted against the minimum wage?
They voted against raising the minimum wage because they wanted to keep Oklahoma affordable.
Bro, that's so crazy. That's that poverty complex, though. That's that I'm going to stay on Section 8 because I'm getting all this for free. Why would I go to work? Like, I'm not going to get this for free, even though I'm going to get twice as much money. I'm not going to have this free stuff no more. That's insane. But, they say Oklahoma 58 in education. I thought it was Louisiana. We done climbed out the bottom of the barrel, baby. Shout out to the booth. Number 48 probably now. Hey, man, we ain't last no more. But, Big Ricky Bobby said if you ain't first, you last. So I guess we still last.
Exactly. But, yeah, back to just like the wages not catching up and inflation. It is crazy whenever you think about just some of the reports. I know I see a lot of reports that will come across like my my Instagram and stuff, basically talking about how much the value of money has decreased. I actually think I saw a report the other day. It was like, this is how much money a family needs to
we'll get into that. Yeah. We get.
I wanted to get into that on this section.
Well, it's not. Nah, we could do it toward the. I still want to mention something about the Fed right now.
Okay.
Because before we wrap this up, I just want to mention that it's not all bad. With the increase of rates, right? The increase of these rates will also have some benefits. Things like HSAs, high yield savings. I mean, not HSA, HYSA, high yield savings accounts. You'll see your rates increase in those. Slowing of consumer spending, and that'll likely start pushing prices down as people stop spending as much money. Brands, and as they try to be competitive, they'll start having to lower their prices, which will, in effect, lower inflation. So that's a good thing, in my opinion. That's one of those things that I really think
it still sounds painful, though.
Oh, it's going to be painful.
Yeah.
1,000% painful.
Yeah.
1,000% going to be painful.
Do you think that how long it's going to take for that to like trickle throughout the economy, though, right? Because we're talking about the products and everything coming down. But I just saw another report just talking about money and everything. Used cars top averaging $30,000 again. The first time.
Like a used car?
A used car, bro.
30?
30.
For a used car?
For a used vehicle.
Boy, you must be talking about like a used 2025.
It didn't tell me like the age or whatever, but the report definitely said used vehicles.
$30,000 for a
Yes,
used car.
used vehicles have toppled 30,000.
These boys smoking.
And I
I don't
think
know
that's
what
the
they
first
smoking.
time. Oh yeah, look, Money Magazine is the people who posted it. I can read it right now. Used car prices climbed back above 30,000 for the first time since 2023. Kind of same with the last time that this rate cut happened. I'm not rate cut. Interest hike. According to car gurus, as buyers face higher costs across the auto market, the average used vehicle reached about $30,200, up more than $3,000 from a year earlier, driven by rising new car prices, tariffs, inflation, and tighter supply. So it's not telling me like the year or whatever, but
But
still,
still.
used cars are averaging 30,000. That's terrible.
Yeah, so again, to just illustrate that, like that really hammers home the point. Inflation is the bigger issue here. Whenever we're talking about like, yeah, I mean the job market, it already hasn't been great. We've been seeing layoffs all year already. So at this point, tightening it will hurt. It will definitely, we'll probably see more of a continuance in that trend. But I think it does us more good to try to fix the problem in a sense, right? Where it's like what we've been doing is kind of like putting a band-aid on it and saying, oh, everything's fine, but this will actually go to addressing some of those root issues with affordability and getting things down. It's not going to be a quick process, not going to be an easy process.
Benefit from this?
Who you think?
Like the payment people. The people that do like the installation payments.
Like Klarna?
Yeah, Klarna and everything. I think that they'll probably be a winner in this because if we're raising rates, it makes it a lot harder for you to borrow money. And once again, being that I work at a retailer, I see a lot of macroeconomic trends. Like one of the things that I see
happening in real time.
Yes, I see a lot of people using gift cards that they purchase from Klarna to shop at my store. And one lady directly told me, "Oh yeah, I don't use credit cards no more. This is 0% interest, and I don't have to worry."
So wait,
about
you said a gift card? Is it a gift card or a credit card with them?
So you can do two different things. Like you can purchase a gift card to whatever store you want to shop at, and then you can just use that gift card directly. But you're gonna purchase it through Klarna. So
And it's going to be split in four still?
Yes.
Interesting.
Yes. Because at my store, we got to pitch credits and everything. And I was like, you want to go ahead and get a credit card? She's like, no, I use Klarna. I don't have credit cards. This is 0% interest and all of this and that. I'm like, oh, I never thought about it like that.
Interesting. So yeah, they definitely probably stand to benefit from that, being that, access to credit will be more restricted and they're definitely a lot more lenient than traditional lenders. Last point on the Fed before moving on, because I do want to get into that affordability thing we were talking about. One last quick note. New sheriff in town, Kevin Warsh, did do two things that were very different than his predecessor. One being he shortened some of the market sentiment statements that people have been relying on that Jerome Powell would kind of give. And he also cut what's known as future guidance, which would kind of let you know where the Fed was leaning toward the next time. So markets, and the reason they did that was because markets have typically, with the FOMC meetings with Jerome Powell, markets react pretty wildly based on what he said. So he's trying to remove that aspect of it. Doesn't want the Fed as tied to the market's performance. Again, which I think is a good thing because it's just kind of undoing that loop of we're just going to keep running it up till the bubble gets bigger and bigger and bigger,
I still ain't calling him Big Kev, but I see what you're saying now. I see why you're like, okay.
I mean, time will tell for sure.
Yeah, I'm not mad.
We can't say he doing it all right now, but time will tell for sure. Time will tell for sure.
He's taking steps in the right direction.
Okay. Yes, indeed, man. But yeah, bro. So going back to that other point, though, you were mentioning about affordability. And I did want to go through this with you because you were saying about affordability for a family of four. Now, I don't have the numbers for a family of four in front of me, but I wanted to see, the new numbers just dropped. Smart Assets report. They do an annual report about the cost of living in America. And it was found that I want to say it was on average a little over 100,000 is what it takes to be comfortable in America these days. So what I want to ask you is, I got this list here. It's the top 10 cities, and it's going to be how much you need to earn to live alone in these 10 cities in America. And I want to hear your guess, right? So I'm going to give you the city name, and I want you to tell me how much you think it's going to be to live there, right?
Sound like a fun game. Let's do it.
Okay. All right. We'll go down the list, and we'll come back after it. All right. Number 1 on the list, New York.
You want me to guess right now, or are we going to come
Yeah,
back?
you can do your guess right now.
Does it take to a single person living in New York?
One individual, a single person living
We
in New York.
owning a home or we renting?
We're renting a 1-bedroom apartment, and we're looking at it with the 30% rule in terms of what's comfortable, right?
I'm smelling what you're stepping in.
Okay.
To be comfortable as a single person in New York, I'm going 125.
Invert the 1 and 2. I mean the 2 and the 5.
152?
152 for an individual.
Sheesh.
All right, now we got San Francisco next.
Ooh, Bay Area. I'm saying Bay Area is along the same as New York, maybe a little bit cheaper. 146.
Less. We'll come back to it. Boston.
Oh, I'm not too sure on Boston. 120.
Los Angeles.
135.
Seattle.
117.
DC.
I heard DC is expensive. 136.
I ain't gonna lie, you overshooting it on a couple of them. You hit one on the head, but you're overshooting it on a few of them. Okay. Austin.
Texas. I'm gonna go with 110 for Austin.
All right, Chi-Town.
115.
Dallas.
Around the 110, around the same as Austin.
And what'd you say for Houston?
I'm
Mind you,
giving
these are
all the
all for single people.
Yeah, I'm giving all the Texas around the same. For single people, I'm gonna say 100,000.
So a lot of these numbers will surprise you because even though the national average is around 100, a lot of these numbers you actually overshot. The only one you hit on the head was Boston. You hit it on the money, 120, right? But LA, you were a bit above. Seattle, DC, you were way above. So just going through the list, right? So New York, average 1-bedroom rent is $3,800 a month, and they're saying using 30% rule. So the way the 30% rule applies here is 30% of your salary. So, your rent shouldn't be more than 30% of your salary. 152 is what they're saying you need as a single individual in New York. San Francisco, 132K is the number there. Boston, 120. Jalen was on the money there. LA, they're saying it's at 108 with the average 1-bedroom rent being at $2,700. Seattle, average 1 bed, $2,500. 100 on the money in terms of a single person to be comfortable. DC comes in just shy of that, $2,400 for a 1-bedroom and $96,000 for a single person. And now when we come into Texas, we see the numbers drop significantly.
I was about to say it did go down. Yeah.
Which honestly, I'm skeptical on these numbers because we live in Texas, right? And it's like I think they're still thinking of 2022 Texas in terms of pricing because we've seen prices rise, but rents still aren't crazy. So in Austin, average 1-bedroom they're saying is about $1,900, and you need $76K as a single person. Chicago, about $1,700 on the rent, $68 for an individual. And then Dallas and Houston, Dallas at 60.
Cold in Chicago. I forgot. It's too damn cold.
So Dallas and Houston, $1,600 and $1,500 on rents respectively, and for individuals, $64K and $60K. So Houston, of all the cities, they're saying is the most affordable. Dallas being the next most affordable, with New York, San Francisco, these other cities being the most unaffordable of these. So with all these numbers, I still think it's crazy to say, looking at the national average where it's gotten to be above 100 to be comfortable in these places. It just speaks to why things need to start coming down. like why prices need to start coming down, because everybody's feeling this squeeze. It's not like it's just the people at the bottom anymore. My little sister, she's convinced that all artists are broke right now because everybody going on tour at the same time. I swear to God, this girl, she's like, man, they broke. They gotta be. Everybody's on tour. Everybody. One of them just got back from tour. He on tour again. I think she was talking about Jid. She's talking about Jid. She's like,
well,
Jid just got off a tour.
Don Toliver just got off tour, and he's going on a whole world tour and revisiting some cities he's already been to.
I don't think it's a recession indicator per se, but it is interesting that it's a lot of financial strain. We've been seeing so many factors in the market showing that there's financial strain, right? All the data suggests that people are overextended financially.
You remember B. Simone said?
I mean, what we got? Savings that are reaching all-time lows. Credit is at all-time highs. You got
the amount of people tapping into their retirement funds just for like everyday spending as well.
People are doing a lot of debt leverage to maintain lifestyles right now. So somehow, somewhere, we got to put a cap on it. You know what I'm saying? And if that's what it takes, if it's going to be a little pain in the way, we got to do what we got to do.
Yeah, and the reason why I brought up the pain part is just, hey, we got to be ready, man. Make sure we positioning ourselves so we can absorb those shocks.
Indeed. Though you're not over your skis. Speaking of pain, man, that's a good transition because I want to talk about your boy, man, your favorite person on the planet, Mr. Sam Altman, man. And
that's definitely not my favorite person.
But we talk about pain. We're talking about the pain of OpenAI right now. And OpenAI is hurting, dog. They are hurting bad. Things are not looking the best for them, to say the least. So just last week, they had some really bad news leak about them. Some of their financials got leaked and was audited. And it found that they lost $38 billion last year.
Sheesh.
Yeah. So OpenAI is, in terms of talking about being over levered, people out in front of themselves, out in front of their skis, as they say, it's starting to get to the point where the rubber has to meet the road for them. And whenever we start looking into their financials and things of this nature, it's a very bleak picture in terms of what they're promising and what it seems like they may be able to deliver.
So what, you want to go with what was leaked last week?
Yeah, we could talk about what was leaked last week. I'm just trying to update my little thing.
So there was some data that came out that said that they lost, like you said, $38.5 billion on $13 billion worth of revenue. So they are very, very underwater, as you would say, in the financial industry. If you bringing in less, or if the asset is less than what you actually owe for it, they're very, very underwater. The thing that kind of gets me is I do see companies that have been not turning a profit for years finally figure out a way to turn a profit. Two of the most notable I can think about is Amazon and Netflix. Like both of those companies were not profitable for
hyperscalers
for a very long time. And then they finally found a way, even Uber as well, they finally found a way to turn profit. So that's one of the reasons why I'm like, is it truly like something to be concerned about? Yes, it is, because that's still a lot of money. But at the same time, if they keep on getting investors and something finally pops, they could make it work. But the thing that kind of gets me, that concerns me about OpenAI and AI in general, and I don't know if this is maybe a point that I should like do a little bit later, but is the way that a lot of these major corporations are backing out of using AI. Mm-hmm. Due to the way that these AI companies, yes. At first, whenever AI, like OpenAI and ChatGPT and everything were first getting started, you just pay a monthly subscription. I think the enterprise plan or pro plan, $200, entry level plan, $20 a month. And you could use it as much as you wanted to. But over the past year and a half, these companies have switched from that plan to a more tokenization plan. And
API keys.
yeah, where you're using API keys, and they are charging you based on your usage rate. So now they're throttling or capping you out. If you think about it like cell phone data, or think about just this is the maximum amount you can get until you hit your limit. Like a lot of these companies are starting to blow through their budget. Like Uber being one of them. Uber came out earlier this year stating, "Hey, we've already blown through our
AI budget.
API and AI budget." So
And that's Google.
that's the part that kind of does make
They own the AI system, one of the AI systems.
exactly. So that's kind of like the part that makes me worry, because if they're not able, or if they're blowing through their budget, how can they expect to keep up with the demand of the everyday person? And just in general, if your enterprises is not going to actually be one of the people that's, investing or taking the time to spend on this, because a lot of companies are cutting back on AI initiatives. They're seeing, I was watching a video this morning, they're seeing that a lot of the AI usage isn't even coming from people that are doing like coding and real productive work, like within the
There's people asking a bunch of BS questions.
it's people's asking a bunch of BS questions, or converting a lot of documents from one file type to a different file type. And
What?
those,
That's not
yeah,
even, you
so
need
like
AI for that.
they creating like getting it to create the slideshows and everything, and then making it go from one file type to like a markdown file is what they called it. And they're like, the markdown file is what's using a lot of the token utilization.
So what is a markdown file, Jay?
I ain't gonna lie to you, I ain't got an answer for that one. I just
Okay, I
remember
was
them
just wondering
talking
if what
about
it was. Like, this something that's like a different file type? I've never heard of that before.
It's it's an MD. Actually, whenever you set up, what is that you set up?
OpenClaw?
OpenClaw, you had to do an
Okay, I
MD
do see
file.
that. I've seen .md before.
Yeah, or
in there.
lightweight
Okay.
plain text documents that use simple system. Oh Jesus, if I can speak. A lightweight plain text document that uses simple symbols like the hashtag for headings and double stars for bold text to format content.
Okay.
Yeah.
So it's just a different file type, probably making it easier for the AI to read the information and integrate it into what they need it for. Okay.
But they taking all of these complex things and turning it into markdown files and everything like that.
Gotcha.
Which is, eating up a lot of the token utilization.
Understood. Yeah. So as they're trying to charge more for these things, they've actually made money. So OpenAI, like their revenue is increasing, but the problem is their spending is increasing even faster. So a journalist, the one that actually did the audit of their financials, his name is Ed Zitron. Not gonna lie, Ed's probably the biggest OpenAI hater I've ever seen on the planet, bro. That man hate that company, bro. If you type his name in, he probably on YouTube somewhere talking about how this is all gonna fail
Hard
and
smack.
it's not gonna work. And
So is
it's
this
gonna
biased then?
I do say he has some bias, right? So that's part of why I mentioned it. Ed is a big OpenAI hater, but this is an audit of the financials that he reviewed, and also the Financial Times, which is a very trusted publication, also reviewed it, and they found the same thing. But one thing I wanted to point out from Ed's discovery was this, and it was that part of OpenAI's losses that they're not counting was $41.5 billion due to the change of the assets from it being a nonprofit to a for-profit company. So they lost significant money on that portion of it just there.
Plus
And
the
that-
38.5.
Plus the 38 billion. So
Sheesh.
really their true bit, what he's saying is their true net loss is about 60 billion.
Okay.
And then, once you start, you lowered it to 38.5 by removing 17 billion that was contributed to net loss attributable to non-controlling members' capital. And, all these accounting tricks basically is what he's alleging, is that they're using a lot of accounting tricks to show a $38.5 billion loss instead of the actual money that they've burned. And looking at it, right? So this is OpenAI's revenues and expenses just for the last 2 years, right? So in 2024, they made 3.7 billion in revenue, and their expenses closer to 12 billion. Last year, 13 billion in revenue, and we're looking at expenses shy of 35 bill. So it looks like they're spending $1. I mean, they're spending $3 to make one. As it currently stands, that's how this market is set up. So I don't really see a viable path to profitability for this company. And with this information leaking, what we can really see is the desperation kind of coming out, right?
Mm-hmm.
So OpenAI actually planned to IPO in the fall of this year, but now, go figure, maybe a week or two after these reports come out, they're considering pushing it back to 2027.
Yeah, let's let the heat pipe down, Sam.
Let's let that pipe down. And there's some concerns with their spending. They spent more on marketing than companies like Coke, and they spent more on marketing than Coca-Cola.
That's crazy.
And some of the things that they're considering marketing, and this is where Ed alleges, that this is some financial foolishness going on. They're considering like free credits that they're giving to startups as marketing costs.
Oh, that is crazy.
So they're doing stuff like that. And then there were big concerns also with them missing some internal revenue targets. So it actually came out that the CFO and Sam Altman were bumping heads. The CFO, this lovely lady, decided that she was going to speak on this. And it was reported that she said they were spending excessively on data centers, and she questioned their ability to sustain contracts. Because if their revenue doesn't grow, then they're
have to pull out.
But now, after that was originally what was reported. That's what they said originally, right? They missed the revenue targets. They're not sure if they're gonna make it. But then she came back and she was like, "Oh no, wait, that's not what I said. We got a vertical wall of demand. It's practically impossible for us to meet all this demand." So it's a lot of
rigmarole.
It's a lot of jumping back and forth with people saying they're gonna do this and saying they're gonna do that. And it's like, I ain't trusting it, man. I ain't trusting.
I ain't buying it at all.
Cause the plan right now for them, and I've been hearing talks about it, is for them to lower their prices. So if you're already spending $3 to make $1, what does lowering your prices solve?
Trying to attract more new users.
But at what point does that make it better? Like, you're not making the money. If the money's not being made,
you gotta figure out a way to reduce your costs.
But how? Whenever we got this memory shortage crisis right now,
exactly.
Like the memory shortage crisis in combination with that, I just don't understand how it's even feasible or viable for them to do so.
They don't care. They just gonna keep on pushing forward. Everybody opening up a data center if you keep on looking.
But we were talking about this before. They've actually stopped plans on a lot of these because the money's not there. And what my big fear is with OpenAI is what I see with them. It seems like the company's purpose has been perverted. So when OpenAI first came about, it started out as a nonprofit. And its whole goal was that, and the whole mission of OpenAI was that no one person should control this technology. This technology is too powerful, and it should be something that's open and available to everybody. Well,
earlier I mentioned real save the world type stuff.
On some real save the world type stuff. Well, earlier I mentioned they've been converted from a nonprofit to a for-profit company. And in researching for it, what I found was whenever they were a nonprofit, the way that the company was structured was the board kind of held the CEO in check. And they had a provision in there that investors couldn't earn more than 100x return. Anything over 100x would go into a fund to support nonprofit causes, which, I mean, that's 100x. That's pretty significant. I think that's a fair threshold for your investment. You got 100 times what you put in. I think that's fair, right? But
I think that's more than fair.
Then you got what you asked for. But yeah, with this, right, with them changing this over. This has all occurred over the course of a few years. So I don't really know if you remember this, but do you remember when Sam Altman got fired from Microsoft?
I do remember that.
So this is whenever it all really came to a head, apparently, and this is slowly whenever the transition started occurring.
Mm-hmm.
When they fired him,
what was that, like 2024?
I believe so. Yeah, 2024. The board fired Sam Altman, and they were kind of vaguely saying that they just didn't trust him. But he received so much support from the people within the company and Microsoft that they essentially capitulated and brought him back in. And the two people who rallied to get him removed as CEO, he got them removed from the board. So he came
on some Trump shit.
On some Trump stuff. So he came back in, and if you listen to Sam Altman talk, he's very Adam Newman, very WeWorky. We'll save the world. We got, we're doing amazing things for everybody. But he kind of got a similar streak to him where it's like, you saying one thing, you talking out one side of your mouth, but on the backside, you doing some other shady shit, And it just seems like with OpenAI now, since the mission has been so changed with them moving from nonprofit to for-profit status, seeing how much control Sam Altman now has over the company and the direction things are going with them trying to hyperscale and get as many users at the cost of really burning a lot of capital, it just seems like they're the weak link. They're the weakest link in this whole AI fiasco. And whenever the house of cards crumbles, I'm not going to say crumbles, but if it topples a little bit, they the first ones to bite the dust. And I think they really need this they need this IPO to work more than anybody.
You think so?
I think they need it to work more than anybody right now, because like even more than SpaceX, because I think they're really, like, we just looked at the numbers. They're spending 3 times the revenue that they're bringing in. And they got commitments to spend way more money than they even have planned to come in on the books. And their whole thing is like, man, once we get AGI, it'll solve all these problems. But it's like, how far away is AGI realistically?
Same shit Jeff Bezos on.
Speaking of your boy Bezos, man, let's talk about him, man. Because your boy wildin', bro.
He can piss me off, man.
Go ahead. What he did, man?
Man, Jeff Bezos basically saying the data centers need our resources more than humans need their resources.
Huh?
Yeah. Word for word, bar for bar. If we starve our data infrastructures of cooling resources just to sustain baseline human comfort, we are actively delaying the birth of a super intelligence that could solve all of our resource problems in the first place. Pissing me off, Jeff.
That sound good.
Because
sound like a load of cockamamie to me.
We are actively delaying a supercomputer that could. Not that would, not that will, but that could.
Just a potentiality.
It sounds like you trying to put as much money in your pockets.
Facts.
So you could go buy another super yacht.
So you could build some more of these data centers.
So you could go ahead and rent out a whole nother city just to get married again.
Yeah, that's crazy. Like, and the thing with this argument that I hate with this data infrastructure and like, oh, AGI is going to save us all, is that how wide and varied the opinion experts have on how soon it could happen. So most people say it's an eventuality. Like it's actually, it can occur. But like conservative estimates are like 20 years from now. We talking like 2040 whenever they talking about actually having it done. And the most aggressive people, like Sam Altman, saying, oh, it could be here as soon as next year. But the reason he's saying that to me is you stand to benefit from this happening within a year.
Sam can eat that ham for the fam.
What? What? Bro, what? Bro said Sam could eat the ham for the fam. All right, man.
Oh, man. But no, dog. That is crazy because he been talking about AGI since I'm not going to say since I first learned about Chat GPT, but he has been talking about AGI and like, oh, it's basically here or it's almost here for a while at this point. Like,
It sounds like Elon, bro.
exactly.
Like, oh man, we right there. It's
With
right here.
self-driving cars.
10 years ago, he been saying we're gonna have full self-driving cars. It's 2026. Now you got to pay $100 to get the feature. It's not even like a full-time thing.
That's crazy. So yeah, I'm not bought on this. I'm not bought on the way that they're pushing the data centers and they're trying to go ahead and bully their way into resources that a lot of cities are using, that a lot of civilians are using. Like, if that's the case, you need to figure out how to build your own power grid, how to figure out how to get your own water resources instead of bullying municipalities out of what they need for their civilians.
I ain't gonna say bullying. They pimping them. They greasing pockets and doing what they need to do.
Like there is a few cases of bullying. Like there was a municipality I think in Idaho or Utah where they ended up saying no to the data center coming. Data center turned around, sued the municipality for the land and won.
Damn. What, they went to like a state court?
I don't know what type of court they went to.
That's crazy.
They ended up suing the whole city and they ended up winning the case.
Ooh, that is insane. But with that, like, I understand to a degree that this AI build out is inevitable, and I think too often we fall into like the software side of things, only thinking about the end software. But it is bigger than that, right?
Yes.
It's a whole ecosystem. So I understand what he's saying to a degree, but I do not agree with that sacrificing human comfort part. Because you not sacrificing no comfort
at all.
You are not sacrificing nothing, brother. You are just telling us, hey man, you just need to work a little bit harder. Meanwhile, like your thing is, I make 3 big decisions a day, which, hey, you know, you built the company, more power to you. No hate, no shade about that type of stuff. But you can't be so detached from the reality of everyone else that you're saying like, hey, yo, man, y'all don't need no water. Just give it to the data center so we can get a computer that's going to tell us how to get more water.
And you got triple reverse osmosis in your house. Water's clear as crystal.
Got Osmosis Jones water just cleaning out his system.
Come on, man. Get up out of here.
Yeah. Yeah, man. Pack Jeff up. Pack all them boys up with that one.
They really burn me up, dog.
Last thing I want to get into before we wrap this joint up, though, like related to this, is just AI stuff. You seen the hype about mangoes?
Nah, man. I like mangoes, though.
I like mangoes, too. So they were saying, you know, mangoes is the new thing, bro. They saying Fang is dead. It's all about mangoes now.
Mangoes is a tech thing.
Yes, well, not just
Stock.
tech.
Sorry.
Stock, yeah. Like, you know, Fang, Facebook, Apple, Amazon, Nvidia, Google. That was the big Mag 7 stocks that they were always talking about. Now they're saying it's, with this AI trade, it's mangoes. So it's Meta, Anthropic, Nvidia, Google, OpenAI, and SpaceX. Yeah, sound like a bunch of bull to me. I ain't gonna lie, I ain't buying it.
You ain't gonna get you a mango portfolio, man?
I'm not going for mangoes just yet. I feel like we way too early on mangoes, bro. We're way too early on mangoes. Like, what are we talking about right now? 2 of the companies we named not even public yet.
I was thinking that whenever you said Anthropic.
OpenAI, they just said they plan on pushing they may push their IPO back to next year because of a lot of the concerns about it, and they're seeing how bad SpaceX's IPO has gone. Terrible. SpaceX is like losing value. They just issued a bunch of bonds. I think the bonds are like selling off crazy too. It's not looking great over there. Excuse me. Not looking great over there. With it, I just wanted to bring it up. If you see people talking about mangoes, don't get on the FOMO train. Stick to what we talked about last week. We talked about a lot of the infrastructure stuff that you can buy, the pickaxes, in a sense, to this power grid problem. We are going to get into one thing. I listened back to an old episode we were talking We talked about the cooling. You mentioned us talking about cooling stocks as well. So next installment of the show, we're going to get into those and some of the other companies that you can get involved in, maybe also the memory companies, because we mentioned the memory shortage, but I don't think we've talked at length about a few of the memory companies because that trade's not going anywhere. Apple literally just raised their prices because they're like, hey, like this storage is beating us down, so we got to raise our prices. And I think on average,
Which I
most
still
products
not
went
buying
up.
that either.
I think most products went up like 20% of their costs, like something like that. Yeah, but you don't need nothing new from Apple just now. You don't need a new iPhone just yet.
You don't.
If you complain about their prices, don't buy it. The way I look at it. But yeah, man, that's all I got, dog.
I had one other thing, but I'll talk about it on the next one. So to everybody who is still here with us, thank y'all. We appreciate y'all. Thank y'all for listening to us. Thank y'all for tapping in. Thank y'all for being our people. Thank y'all for keeping us going. Appreciate y'all for reaching out to us. If you've ever sent us a DM, you ever commented, you ever gave us a rating or a review, we appreciate it. We hope that everybody out here gain something from this episode. If y'all did gain something from that episode, leave us a 5-star rating and review. We need that. It definitely help us. Other thing, y'all, join the Patreon. Patreon is getting episodes earlier than everybody. We're working on building out other things too. Patreon, you can go from the free tier to a paid tier. Just go over to Patreon, y'all. Check it out. Y'all subscribe. Get in over there for us. What you got, Dave?
Shoot, nah, brother. You touched it all. Man, listen. Love y'all. Until next week, this is BWR signing out. Peace.
Feel like we finna change the cycle, ayy. That's the most success, you know we thriving, ayy. That's the most depression for our rivals, ayy. Could teach a lesson on survival, ayy. You know I'm from the bottom.